Be Wealthy and Smart, episode 990.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about, is the stock market bottoming? Because there's a lot of fear and panic happening out there. Oh my goodness, I'm getting all kinds of emails, tweet questions, all kinds of things from people who are feeling, understandably, very concerned. But I want to show you why we have good evidence that we are in the process of bottoming in the stock market. And while it feels like the market has continued to go down and down and down, actually what's happened is it's gone down and up and down and up and down and up and down. And in that process, it's been basically testing the bottom or testing the lows at that point. So when you look at a chart, actually those up and down movements are pretty much horizontal. They're not a decline like it feels like, which is more of a waterfall decline. But no, now the last few days, it's really been horizontal. So we've been going up and testing about the same point on the low side, just moving sideways. So the volatility is off the charts, and I understand that. And that's one of the things that I wrote about in my forecast, is that the stock market was going to have crypto-like volatility this year. And we definitely are seeing crazy moves where we're seeing the market go up during the day, and then after the market close, we're seeing it go down, or vice versa, where it goes down during the day and then after the market close, it goes up dramatically. The volatility is really crazy right now. And the best thing you can do generally is to hold through this, or to pick up some bargains and do some dollar cost averaging, buying a little bit at a time on these dips, and that means that you're getting a lower average price across the board. So what happened since the last time I talked with you was the Federal Reserve met and announced that they were not going to be raising interest rates at this time. And while they acknowledged that we have inflation of over 7% in some prices, they didn't feel that this was the time to actually start raising interest rates, and made some indications that that might happen more around the March time horizon. Just the jawboning or the narrative that the Fed gives can affect whether interest rates go up or down, because they can talk about their intentions, and just talking about it can make interest rates rise in anticipation of the Fed raising interest rates, or it can make interest rates drop in anticipation of the Fed not raising rates for a couple of months. So we see a lot of volatility within interest rates as well, and that makes it a bit unsettling for the stock market, because the stock market often looks to the bond market for guidance. So when the bond market is moving around, interest rates are moving a lot, that's generally not a good thing and can create more volatility and uncertainty in the stock market as well. And yesterday, Apple Computer announced good earnings, which boosted their price after the close up 5%. And should that continue today, we could see nice follow through in the tech stocks, particularly Apple, which is always a bellwether indicator. Another indicator that I look at is sentiment. And the sentiment right now is extremely negative, and we're always contrarian. So a negative sentiment is actually positive. And what we're seeing in the CNN investor survey is that we are in a period of fear. But when I go to the American Association of Individual Investors and get a more specific survey, it shows dramatic or extreme fear. 52.9% of people are bearish or expecting the market to go down in the next 6 months. 23.9% are neutral, and only 23.1% are bullish for the market for the next 6 months. This is often a really good indicator. When you get that high number, like almost 53% being bearish, that's a really bullish indicator, meaning that the stock market is likely to do the opposite and go up. And remember, stocks always climb a wall of worry. So you need to feel a little scared that maybe the market's going to go down, and that actually will drive stocks higher. So I still think we're going to see new highs by the second quarter. I think we are going to have a strong rebound. I think the shorts have overdone it, and we still have a lot of hedge funds and large financial institutions that have gone too short on this market and are going to have to cover. That means they're going to have to buy stock in order to cover their shorts. And buying stock in the open market is very bullish. I still think we could have a market crash on the upside, meaning the shorts get crashed because they're too short and they're positioned in the wrong direction. And the market is ready to take off to the upside, which is going to force those shorts to cover and buy back their stock positions, thereby boosting stock prices that have suffered year to date much higher. I'm thinking of stocks like Tesla that have a large short position in that stock, and it's been driven down dramatically. And should there be any good news or any short covering in the stock, well, the price is going to go much higher as people accumulate stock to cover their short positions. So the answer to my question, are we in a bottoming process? Absolutely. We are in a bottoming process. I think we've probably seen the worst behind us. And I said that a couple of days ago. And again, we've just been moving sideways since that time. So yes, this is just testing the bottom, testing the bottom, testing the bottom. We've done it 3 times now, and the bottom is held. That means we could be ready to go higher and follow through with that and have the short covering come in and be ready for a nice move on the upside. So I see this as a really great buying opportunity. If you have some extra cash you've been wanting to put to work, this is a time to buy things that have sold off really hard, and you can pick up some bargains that way. When we look at the crypto markets, we're seeing the same or similar things. We're seeing bottoms generally being put in. We're seeing markets oversold dramatically. We're seeing a lot of shorts that are going to have to cover and buy back their crypto positions to cover their shorts. And we're seeing that they're related to the shorts in the stock market. So as I said, companies short at the same time, but they can also get margin calls when they're in the wrong direction and they're losing equity. The brokerage firm will automatically sell out their positions in their margin account to cover their margin. So I think we'll see some shorts covering in cryptocurrencies and buying back to cover. And I think we'll see shorts covering in the stock market and buying back to cover. And with the extreme bearishness right now, I'm very bullish. So have some confidence. Keep your eye on the long term. This bull market is not over, and we have higher to go yet. And I think we will see those new highs before the second quarter. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button, and you'll be notified as soon as new podcasts are available so you never miss one of them. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.